The beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. Now, to encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Better Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are reminding everyone to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. And just as you know, every week we get this particular segment for you with a very innovative and a timely topic. So this time, many investors believe the biggest risk in the stock market is a market crash. But in reality, for long-term SIP investors, the bigger danger is something else. Stopping the SIP during a market fall. That's right. Now, market corrections are temporary, but the decisions to pause or discontinue SIPs during these periods can cause permanent damage to wealth creation. A systematic investment plan is designed to work precisely because markets go through ups and downs. When prices fall, SIPs automatically buy more units. When prices rise, those extra units multiply in value. However, when investors stop their SIPs during downturns out of fear or uncertainty, they unknowingly block the very mechanism that drives long-term compounding. So in the following examples, or in a conversation ahead, we will also help you understand how two investors in the same market investing the same amount end up with drastically different results, not because of market performance, but because of behavior during market falls. And to help us understand all of this, we are joined by Nikhil Kothari, who will help you stay away from this loss. Nikhil, hi, welcome to the show, and very interesting topic and very timely, looking at the market volatility. But let me just ask you, what is the real cost of stopping an SIP for even 6 to 12 months during a market correction? Now, can you share a real life data or simulations showing wealth lost due to SIP stoppages?
So basically, Kavita, what happens is that every time when the markets are going up, people feel very comfortable investing their money. But when the market crash happens or market falls, right, people become fearful and people panic, and then they stop the SIPs, saying that I'll stop for some time and then restart it again later. But the impact of stopping that SIP for a very small period of time can have a huge impact. Let me just give you an example, right? So for example, there are two investors, right? Both start with the SIP saying that you want to invest 10,000 rupees per month for next 10 years. Okay. Now, say first 2 years, everything was good, market was going up, and you continue SIP. In the third year, market fell by 30%. Okay. And that year you have stopped the SIPs, okay, for the one complete year. And then after fourth year, you again start your SIP. So you may say that, okay, it's fine, I've stopped for 1 year. How much will it matter to me? So just to give you perspective, right? If someone has done SIP for first 2 years, stop for third year, and continue from fourth year to 10th year, right? So overall, he has invested around, say, 10.8 lakh rupees. And in this 10-year journey and stopping of 1 year, he would have created a wealth of 19 lakh rupees. But the same time, the second investor was patient, who didn't bother about whether market goes up or market goes down. He kept on doing his SIP, right? And he did the whole SIP for the whole 10 years. Okay. So here invested around 12 lakh rupees, right? And his wealth was 26 lakh rupees. So the difference if you see the investment difference in both the investors, investor A, investor B, the difference is only 1.2 lakh rupees. But the difference in terms of wealth creation is more than 7 lakh rupees. The impact of stopping the SIP when the market falls, because when the market falls, that is the time you are buying units at a lower price and you're accumulating more and more units.
Right.
So market fall is not an enemy for the SIP investor. It's a benefit for the SIP investors, right? And stopping the SIP is the biggest reason for not creating wealth. It's not the market fall, which is the reason for not creating.
Right. Right. So, just to understand, how does missing just a few months of SIP affect our compounding over 10 to 20 years? Because people often have long-term goals over year, and SIP gives them the flexibility of investing in small amounts. So, I just want to understand, how will this impact their compounding?
See, basically what happens is that, say, for example, before the market fall, okay, assuming that a fund NAV is, say, 50 rupees, okay,
Right.
and you
Right.
invest in 10,000 rupees, you will get 200 units. Okay. Now market has fallen to by say 30%, and market has fallen to 30, and the NAV of the fund has become 35 rupees. Now, if you're not doing your SIP at that point of time, you're not buying more units. By the second, but the investor who is continuing to invest, right? Same 10,000 rupees, instead of 200 units which he got last time, he will get 285 units.
Okay.
Okay, so you'll get 42% more units because of the market fall, right? And that adds to the overall compounding wealth creation,
Okay.
because you are buying more units when the market falls, right? And during the market fall, it's like every time market corrects, you are buying more units than the last time. And as a result, your average cost comes down dramatically. And as soon as the markets recover back again, right, you make most of the money as compared to the investors who have not accumulated units when the markets are falling. That's the reason why you create huge wealth difference between the people who remain patient and continue the SIPs as compared to people who stop the SIP.
Right, right. So, is the damage caused by stopping SIPs reversible later? If someone has already stopped their SIPs, what's the best way to get back on track then?
Okay, so basically, if you have already stopped the SIP, you have missed out one phase of the market when you could have accumulated a good amount of units.
Okay.
Right? The second option is that next time when the market falls or when markets remain flat, you top up your SIPs. So whenever markets are on the downward trend or markets are flat and not moving too much, right? That is the time you step up your SIPs so that you buy more units at those times, right? And you average out your cost.
Right.
Right. But obviously the missing opportunity is huge. But again, you may have to wait for some time. And whenever the next time correction happens, or the next time market remains flat for considerable long period of time, you try to increase the SIP, you try to increase lump sums when the market falls. So you accumulate good amount of units. Okay?
Absolutely.
And that's how you can benefit from the river. Then that's how you can reverse the earlier misses what you've done.
Okay. So, a lot of time what happens is the wait carries on, they just keep waiting. Many investors believe that they will restart SIPs when the markets stabilize. These kind of strategies usually fail because what happens is they just keep timing the market, and this eventually in turn reduces their long-term return. So typically what happens to investors who wait for certainty before restarting their SIPs?
So the benefit of SIP is inbuilt, right? The whole reason for doing SIP is that you don't time the market, right? You earn every month, you invest every month, and whatever is left is you spend that money, right? So you when you're investing every month, you're not timing the market. You're saying that okay, markets at times can be up and at times can be down, and I keep on buying at every market levels so that my average cost is taken care. When the market falls, I buy more units, and my average cost will come down. Right? That's an inbuilt product of SIP. SIP only works best whenever there's a volatility in the market. If the market is only going up, then actually you're buying every time you're buying more units at a higher price.
Right.
But the benefit of SIP is that whenever market correction happens, that time your SIP does the best amount of work, right? And try to accumulate units at a lower price. And then when the market recovers, your average cost is taken care. So just to give a perspective, say for example, in 2008 starting market was 20,000. In December 2010, market came back to 20,000. So if you have invested in 2008 and hold in 2010 for 3 years, you have not made any return.
Right.
But if you've done the SIP, market from 20,000 went to 15,000, went to 8,000, went to 15,000, went to 20,000. Done your SIP, you have invested at every level. So your average cost was 13 to 14,000.
Right.
And market came back to same level of 20,000. Right? You made CAGR 20-25% return. Right. So that's the benefit of SIP, that it times the market on its own. You don't have to time it on based on your skills.
Absolutely. I think with that, it's a wrap. I know there are not many aspects that we can talk about, but I'm time bound over here. But
Just
thank
add
you.
one more
Sure,
point here,
sure.
Kavita,
Go
is
on.
that there's always a bull market in the stock market.
Yeah.
Sometimes the bull market is for the NAV, where NAV keeps on going up. Sometimes
Right.
it's a bull market for units, that when the market crash happens, you are doing your investment, so you're buying more and more units.
Right.
There's always a bull market. So investors should need to look at that. When market is going up, there's a bull market for NAV. When market is going down, there's a bull market for units. And if you're able to navigate this both the bull markets, you can huge amount of wealth.
Absolutely. Very well explained and point noted. Thank you so much for participating in this particular segment today.
बोनस म्यूचुअल फंड्स में